Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at a company called USA Rare Earth.
And if you find what we talk about useful, please consider hitting subscribe, like, and maybe drop a comment for us underneath.
So there's some massive news this morning. January 26, 2026 just dropped.
Massive is, I think, an understatement. The United States government isn't just watching the critical minerals race from the sidelines anymore.
No, they've officially become a player. We're talking about a huge investment package, something like $1.6 billion involving the Trump administration.
And this isn't some, vague promise or a handshake deal. This is real money. The government is acquiring a 10% stake in the company.
They're buying shares. It's a direct equity investment.
Which means this isn't just a mining stock anymore, is it? It's basically a national security play.
That's exactly how you have to look at it. This is where the whole Trump 2.0 resource strategy meets a company that, let's be honest, really needed a vote of confidence and a lot of cash.
Okay, let's pause right there because I want to unpack that. Before we get dazzled by the government's seal of approval, I have to be the skeptic.
Of course.
If you looked at this company's balance sheet on Friday, before this news, it was pretty ugly, wasn't it?
Ugly is a fair word. The financials were, let's say, alarming.
I mean, I'm looking right here. Revenue, zero. A big fat zero. They're a development stage company, I get it. They were just burning cash.
Right.
The last earnings report was a loss of 25 cents per share. The street was expecting a loss of, 6 cents? They missed by a mile.
That's true. They're in that capital-intensive phase, building everything out.
But it was more than that. The auditors and the filings, they mention going concern doubts, which for anyone listening is basically the accountant waving a giant red flag.
It's the, we're not sure they can keep the lights on warning.
Exactly. Without fresh capital, they were running on fumes. So, yeah, on Friday, you saw a company on life support.
And then Monday morning, everything changed. You can't really value them on Friday's numbers anymore. The entire risk profile has shifted.
Okay, so let's get into the details of this deal, because it's not just a simple check. How is this whole thing structured?
It's a mix of equity and debt. First up, Washington is getting 16.1 million shares.
Okay.
But the key number here is the price. They're buying in at $17.17 per share.
17. Wait a minute, the stock closed Friday at $22.71.
It did.
That's a huge discount. That's nearly 25% off the market price.
It is. And normally, that would be a really bad sign, right? It means the company is desperate. But there's more. The government also gets warrants for another 17.6 million shares.
Warrants. Okay, break that down for us. Explain it like I'm 5.
Think of it like a coupon. The government gets to buy shares today, but they also get a coupon that says they can buy more shares in the future at a set price.
So if the stock goes to, say, $50,
They can still use their coupon to buy more at that lower agreed-upon price. It's a sweetener.
so they got a discount and a coupon. Uncle Sam drives a hard bargain.
Well, in exchange, the company gets the big prize, $1.3 billion in debt financing, and it's drawn from the COPS and Science Act facility.
That's the safety net. That's what wipes out that going concern risk we were talking about.
It's gone. And I also saw that Reuters report this morning, there were rumors of a separate $1 billion private investment that might be announced today.
So the government steps in, takes the risk off the table, and now private money feels safe enough to follow them in?
That's the play. The risk of bankruptcy is basically zero now.
Okay, so they have the money, but why this specific company? Why USA Rare Earth? What's their moat?
Their whole thesis is something they call mine to magnet.
Sounds catchy. What does it actually mean in practice?
It means they want to own the entire supply chain. Right here in the U.S., they have the Round Top project in Texas near Sierra Blanca.
Right, and Round Top is known for heavy rare earths, specifically dysprosium.
Dysprosium is the magic ingredient.
Why that one element? We always hear about lithium, cobalt, but dysprosium seems to fly under the radar.
It's all about heat. If you're building a high-performance magnet for an EV motor, or, more importantly, a missile guidance system, that magnet gets incredibly hot. Normal magnets fail. Dysprosium allows them to keep their magnetism at extreme temperatures. You can't build modern defense tech without it.
And right now, we get almost all of it from
China. They control something like 90% of the heavy rare earth market.
So this is a direct shot across the bow geopolitically.
100%. But here's the really hard part, and it's why the company was struggling. Getting dysprosium out of the ground is one thing.
The processing is the nightmare.
It's a chemical nightmare. Separating these elements is incredibly complex, expensive, and it produces a lot of toxic waste. China mastered it because they were willing to absorb those
And the
costs.
West just outsourced it.
We outsource the problem. So USA Rare Earth isn't just digging a mine. They're building processing labs in Colorado, a magnet factory in Oklahoma. They even bought an alloy company. They were trying to rebuild an entire industry from scratch.
Which explains the massive cash burn.
And it explains why the government had to step in. The free market wasn't going to fund this kind of long-term infrastructure project on its own.
So if we look at the stock chart today, the market seems a little confused. We have the $22 closing price from Friday, but this new government buy-in at $17.
Yeah, it creates a fascinating technical setup. Usually, issuing new shares at a discount is bearish. It's dilution. My slice of the pie gets smaller.
So the price should fall to meet that new lower anchor.
But I'd argue that $17.17 is now the floor. This isn't some hedge fund that's going to dump the shares. This is the U.S. government. They're not day traders.
So it's a psychological floor. If it's good enough for the White House at 17, it's good enough for the market.
I think so. And then you have to look at the other side of this trade, the shorts.
Oh, right, the shorts. I saw the data. This is a powder keg.
It is. Short interest is around 17.5% of the float, and that number has been climbing.
So let's walk through the mechanics of what could happen here. What is a short squeeze in this context?
Okay, so short sellers are betting on failure. They borrow shares, sell them, and hope to buy them back at zero when the company goes bankrupt. They were betting on that going concern risk.
But the company isn't going bankrupt now.
Not a chance.
Yeah.
The government just walked in and said this company cannot fail. So everyone who bet on zero is now trapped.
They have to buy shares to get out of their bet.
They must buy. But if they all rush to buy at once, the price goes up, which causes more shorts to panic and buy, which pushes the price up even more.
It's a feedback loop.
A vicious one. And with the government and potentially this new private investor locking up a huge chunk of shares, there might not be that many available to buy.
So liquidity dries up just as demand spikes.
That is the perfect recipe for a massive squeeze. The price could completely detach from reality in the short term.
It is going to be a wild day of trading. Let's zoom out, though. Why now? Why January 2026?
Well, we're exactly 1 year into Trump's second term.
The Trump 2.0 theme.
Exactly. The administration has these 4 key pillars: AI, space, energy, and resource foundations. This deal is the poster child for that last one.
I've heard analysts calling this the Trinity policy: spear, shield, and fire.
It's a bit dramatic, but it fits. The fire is the industrial base. This deal is the government using fiscal policy to secure the supply chain for the spear, which is the military.
Strategically, it makes sense. But what about the market cycle? 2026 is a midterm election year.
The dreaded midterm year occurs.
Exactly. The first half of these years can be really volatile. Are we walking into a trap?
It's a great point. The first half of the year will almost certainly be choppy. But historically, these midterm years turn into what some people call a golden buying opportunity.
So you buy the dip.
The data suggests that, yeah, the second half of these years tends to rebound very strongly. We're talking an average of a 46% increase in past cycles once the political dust settles.
And the analysts seem to be on board with the stock itself. The consensus is a moderate buy, with price targets averaging around $26 and some high estimates up near $40.
And you can see the smart money was moving in already. A firm, Altfest LJ & Co., bought almost 800,000 shares back in Q3. They were positioning for this months ago.
Okay, you've painted a very rosy picture. The deal, the moat, the squeeze potential. But I know you. What's the catch? Give me the bear case.
The biggest risk, by far, is execution. The timeline.
You mean that 2028 production target?
Yes. The Round Top mine isn't slated to produce until late 2028. We are in early 2026.
That's almost 3 years away, an eternity in the market.
It is. It's 3 more years of cash burn. And remember what we said about the processing. It is technically very, very difficult.
So what if they run into delays
Yeah.
or cost overruns?
That's the risk. Mining projects are famous for it. If 2028 becomes 2030, that $1.6 billion starts to look a lot smaller.
And there's political risk, too.
Huge political risk. This is a Trump administration deal. What happens if the midterms shift the balance of power in Congress?
Could they pull the fundum?
They could scrutinize it, add regulations,
Yeah.
make life difficult. When you take the government's money, you live by their rules. If the political winds change, this company's protection could become a political target.
It's a double-edged sword. Your biggest supporter is also your biggest risk.
And let's not forget, for anyone who owned the stock on Friday, they just got diluted. They own a smaller piece of the company today. That always stings.
So it's not a slam dunk, not at all.
No. It's a high-stakes play, but one that now has a government safety net.
All right. We've hit the deal, the chemistry, the shorts, and the risks. Time for a verdict. What's your score?
I'm giving this a bullish score of 8 out of 10.
An 8. That's high, considering the risks you just laid out.
It is, but here's my thinking. The mine-to-magnet plan is no longer just a theory on a PowerPoint slide. It's now federally funded. The number one risk for a junior miner is going bankrupt. That risk is now off the table.
So you're buying the certainty that they'll survive to see production.
Exactly. This becomes a multi-year hold. You're not just buying a speculative miner anymore. You're buying a piece of critical U.S. infrastructure, an insurance policy against Chinese supply chain dominance.
So you're looking past the potential volatility this year.
I am. The catalyst to watch this year is the commission of the Stillwater Magnet Plant. If they hit that and stay on track for 2028, this stock starts to chase those high $40 price targets.
I have to agree, the safety net is the game changer here. This company has almost become like a defense utility.
A defense utility. I really like that term. That's exactly what it is. It's not going to trade on PE ratios anytime soon. It's going to trade on its strategic value to the country.
So while the timeline risk is real, the bankruptcy risk is gone. It's a completely different asset today than it was on Friday.
A total transformation.
So for anyone listening, what's the key thing to watch for today?
Two things. Watch the trading volume. If it's huge and the price stays well above that $17.17 mark, that confirms the market sees it as a floor.
Yeah.
And second, listen to the investor conference call. If they confirm that extra billion in private investment,
Yeah, it would be rocket fuel.
it's going to be a very, very interesting week.
It sure will be. And here's a final thought to chew on. If the government is buying a 10% stake in a rare earth company today, what's next? Uranium, lithium. Are we entering a new era of industrial policy where the government just picks the winners?
That's the billion-dollar question, isn't it?
We'll have to leave it there. Thanks for diving in with us.